All right. Hey, everyone. So let us do Microsoft, or, not that I want to do Microsoft. Although if I had enough money, maybe I would. But just kidding. So we're just going to take a look at the earnings, right? Down to 410, down around here. Sometimes in the aftermarket, there's not a lot of liquidity, and maybe there's a reversal tomorrow, or maybe it goes lower. I mean, the market right now, at least in the tech sector, is in a bearish kind of frame of mind. So anyway, what I want to show you is we could just type in MSFT and then IR for investor relations, and we could go to the Microsoft website. Now, Microsoft is a company that usually has a presentation. Who's that guy? Man, I got more hair than him, which isn't saying much. So when we come to investor relations, we can get earnings call slides. This is, you don't need to do this. You need to release financial statements. But anyway, let's look at the slides. This is what I like to look at. Now, this is one of the things to look at when you look at an earnings presentation. If they do really well, the numbers are right up in the front within the first couple of pages. If they're not doing well, the numbers are, maybe in the back or maybe not even mentioned. Again, they don't need to release a presentation. They do need to legally release an earnings statement. So if in the next 5 or 6 or 7 pages we see numbers, the numbers are good. And then there's a chance that this sell-off in the aftermarket is an overreaction. So let us see. So we're going to get some disclosures. All right, the agenda. Oh, look at that. Financial summary right up in front here. So let's look at this. Operating, all right, 11% growth, Intelligent Cloud, 19% growth, net income up 10%, earnings up 11%, gross margins, they don't really give that. But anyway, the numbers are right up front. So this is probably good earnings release. All right, let's look at this. Blah, blah, blah. Cloud revenue. So make sure a lot of times when you're, some companies, they have the numbers right to left. Some companies have them left to right. So be careful. There's no standard. And I've seen people, make big mistakes. But look at this. So Q4 full year 24, 36.8 billion. Q4 23, 30.3 billion. This company is really growing. What we got to look at is the debt. Is the debt growing faster than the revenue? And I doubt it. All right, operating expenses. All right, well, hey, operating expenses up 13%. Oh, a big part of is the Activision acquisition. So when Activision kind of, fades away, it'll kind of get, effective tax rate of 19%. Well, hopefully President Biden, if you can even call him that, won't, jack him up to 30%. Because guess what? They're just going to go, be in another country. But anyway, he's a lame duck at this point. My opinion, the guy's a friggin' disgrace. All right, let's look at this. Let's look at that. Operating income is a big thing to look at. So operating income is basically how much a company makes after all is said and done. All right, so revenue is up 11%. Operating income is up 12%. So it's not a big difference, but it shows that the company is becoming more efficient. All right, let's go through some more slides here. Blah, 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 blah. So you're probably like, all right, Mark, that's really freaking fantastic. Okay. So how am I going to make money off of this? Well, what I'm trying to tell you is that I think that these numbers are pretty darn good. And, well, wait a second. Oh, this is just the Activision acquisition. So the reason why these numbers aren't blowout is because they're losing 57 cents a share because of Activision. All right. Now, when you see GAAP, that's generally accepted accounting principles, which is kind of what you want to pay attention to. If you see adjustments, the easiest way for me to explain that is like, all right, pretend you had a company that made $10 million a year. And look at that, operating income. This is an important thing to watch here. The operating income percentage. 15%. I mean, that's pretty good. Yeah, so that's pretty good. So anyway, when we talk about like non-GAAP numbers, pretend you own a factory and you make 10 million bucks a year every year. And one year your factory you had a factory, you have a bunch of factories, a factory that burned down and it cost you $2 million. So instead of reporting 10 million, you would report 8 million. But you would have your, adjusted numbers be like, oh, this is a one-time event. So we're going to be like, if it wasn't for this one-time event, we're going to report 10 million. But do they need to pay the numbers or not? Do they need to pay that money or not? Well, in my opinion, they do. So do they make 10 million non-GAAP or adjusted, or do they make 8 million GAAP? I mean, I would go with the 8 million. But, well, we're mostly technicians over here. But these numbers don't look that bad to me. I think the problem is the market is caught in, the tech is in a downtrend. Microsoft can report the greatest numbers in the history of mankind. If people are selling, people are selling. Now, why does this happen? Well, sometimes the market can just run out of buyers. Like in the institutional world, where I was for 2 decades, generally you position your portfolio based upon a percentage. So in other words, say you're managing $1 billion and you say to yourself, all right, I'm going to put 3% of my money into Microsoft, $30 million. Institutions and hedge funds, they're not well, some of them are, but the vast majority of them, they're very diverse. That's why all these people, these fools with the, GameStop and everything, like they're so clueless. But anyway, you might have 50 positions. You might have 100 positions. The last, shop I was at, I think we had 300 positions that I had to monitor, right? Because they're different strategies. One might be in a mutual fund. One might be in this fund. One might be in that fund. And the vast majority of the time, you're not trading. It's not like no human being alive could trade 300 stocks. No human being alive could trade 10 stocks and do a good job without the help of technology. But anyway, just say hypothetically, you have a full position in Microsoft. All right, you wanted to put 3% in it. You invested $30 million. You're done. Your position is full. So good, bad, or indifferent, when the numbers come out, you're not going to buy anymore. So you might have heard of this whole thing like buy in the rumor, sell on the news. If the market runs out of buyers, it's not going up. I don't care how good the numbers are. So buy on the rumor, sell on the news is an allusion to like, all right, everyone buys ahead of the earnings because they think things are going to be great. I'm not saying this is what happened here. Just educating. This is what we do. But if everyone who wants to take a position takes it, and then the earnings come out and they're blowout, well, the stock's not going to go up because everyone who wanted to buy it has done so. And then some of the buyers start looking around and be like, wow, this ain't working out the way I thought. I better sell this. But they have a hard time finding buyers because the buyers are all full. Their appetites are full. So the sellers need to knock the price down. So the moral to the story, what I'm trying to say here is, if you're a trader, I'm not talking long-term investor. I don't know where Microsoft is going to be in a year. No one does. But if you're a trader, these are the type of dynamics you need to understand, right? Market runs out of buyers. It can only go down. Market runs out of sellers. It can only go up. So anyway, it looks to me as though these numbers are not that bad, but the market is definitely in a downtrend now. So for tomorrow, here's what I want you to watch if you want to trade Microsoft. And of course, we're going to be here tomorrow morning. Look at this 412 level here, right? Notice how when a market's going down, the level that was resistance becomes support, then it becomes resistance again. So support becomes resistance. This is a sign of buyer's remorse. People buy, price goes lower. They're like, oh, if it gets back to my price, I'm going to sell and get out of break even. So what happened? The stock is trading below a former support level. So let's forget the earnings. Let's forget all the stuff I just talked about. If over the next few days, Microsoft can't get back above this 412 level, and the level that was support converts into resistance, that will set the stage for another move lower. And one thing else I want to show you here before I get home is if we look at the S&P 500, right? Everyone's talking about NVIDIA this, NVIDIA that. Forget NVIDIA. You know, NVIDIA this, NVIDIA that. NVIDIA. Microsoft is still the biggest stock in the market. All right. Now, I know you're going to want to look at NVIDIA, but the NVIDIA chart looks really weak. I mean, I think this is going lower too. Oh man, look at that. This is now, let me go back to the institutional trading world. When you're an institutional trader, right? Mutual fund trader, hedge fund trader, a lot of times these things are all under the same umbrella. You can, like, I traded for 3 different institutional money managers. We had different products. We had mutual funds and we had hedge funds and we had, traditional institutional money management platforms. It doesn't necessarily mean like, oh, it's a hedge fund. And I don't know why everyone's so freaking obsessed with hedge funds. There's a lot of hedge funds that lose a lot of money for people. But anyway, sorry for my rant. When you're a retail trader, you're a buy-side trader, it's like you need to give your order to a broker. Brokers need to execute your orders. And if we're in an environment like this, and you were someone like I was, it's like, all right, dude, we're hanging out above support. Take your time. I got 1 million shares to sell, maybe sell 20,000 here, 30,000 there, no rush. When we get a move like this is like you tell your broker, get me the hell out of this thing. I don't even care. This is aggressive selling. And look at that. It started up here and it's continuing through. So, I've been wrong before and I will be wrong again, but I would not be long in the tech sector at this point. Microsoft reported good earnings and it's down. That's what we call action. It's something you can't quantify. It's like I said, the buyers are done. They're full. And now it's like, all right, well, hey, man, now some of the buyers want to get out. A market can only go up if there are buyers pushing the price higher. All right, I'm sorry. I meant this to be like a 3-minute thing, but we're at 13 minutes now. But anyway, if you want to learn how trading really works, check it out and check out our site and subscribe and like us and all that stuff. All right, everyone. I'll see you tomorrow morning.